The next time you apply for a loan or a credit card, remember that the decision on whether you will get it or not, or how much, depends on the data on your borrowing and repayment behavior over time that rests with a Credit Information Bureau. In today's core report, I speak with Bhavesh Jain, Managing Director of TransUnion CIBIL, who's based in Mumbai, and who walks us through what happens at the back end and the scoring process that decides your fate, so to speak. And more importantly, CIBIL wants you to be in greater control of your own data and behavior so you can be a better borrower with a good credit score in times to come.
So I think when it comes to credit ratings, what's yours? Do you know?
My score is 805, which I think is good. Today, if I go with our 800 CIBIL score, most of the banks would welcome me with a red carpet and give me the best terms and conditions. So if you look at in terms of the ever created and reported to CIBIL, would be around 60 crore individuals data reported. And the interesting part is that out of these 60 crore individuals, 27 crore are credit active population in India.
Bhavesh, thank you so much for joining me. So I think when it comes to credit ratings or of individual credit ratings, and I don't want to confuse that with business or corporate credit ratings, what's yours? Do you know?
Thanks,
Say
Govindraj,
good or bad.
for having me on the show. And my score is 805, which I think is good. And the reason I'm saying is that today, if I go with our 800 CIBIL score, most of the banks would welcome me with a red carpet and give me the best terms and conditions. So I think I have performed diligently over the last few years and made sure that I have a good CIBIL score.
And how did you reach that score? I know you didn't aim for a number and then work backwards, but if I were to work backwards today, given I'm sure a score which is lower than yours, what would I have to do?
So like any regular Indian, took a car loan, a home loan, have a few credit cards, and have made sure that I pay all my credit obligations on a monthly basis and make sure that I pay the expected amount, whether in case of a home loan, I pay the full EMI monthly, whether it's a car loan, I pay the EMI, whether it's a credit card, I pay the full outstanding amount. So I'm a transactor. So from a bank's perspective, yes, they may not earn from my credit card because I swipe it, I use it, and I pay it. Similarly, on my home loan and my car loan, I paid on a timely basis. And I'm very particular that I suddenly don't rush into taking too many loans. I space out my credit requirements. And at the same time, I do a detailed planning to make sure that I don't get into a debt trap and I'm able to live within my means. So if you are taking credit, make sure you are able to pay it on regular basis because that's the key and essence to getting a good credit history and a good CIBIL score.
And how long? I mean, for instance, let's say 5 years ago, things were not so good for me, or I didn't have a proper job, or my job was not consistent, or I was jumping jobs. And today things are much better. So what is the time frame that you usually use to assess backwards?
Okay, so let me go a bit into the details. The CIBIL score ranges from 300 to 900. Higher the score, better is the risk profile of the consumer. Now, the scoring happens on 3 years of data, which includes aspects around credit offtake, credit behavior, credit performance, types of credit being taken, the number of credit applications being made. So these are the broad parameters on basis an individual is given a credit score or a CIBIL score. Now, if you would have defaulted in the past, it's recommended that you start making your payments on a regular basis. You don't over leverage yourself, you stay within your means and you are able to pay not just your loans but even your credit card outstanding. When you start making these payments on a regular basis, your score improves. And what we have done is that like every individual can come on the CIBIL.com, take their one free annual credit report, and we have actually also added a score simulator to your point to make sure that the consumer knows that, okay, if I make this payment, if I foreclose this loan, this is how it's going to help me to improve the credit score. So yes, it is possible to improve your credit score, but credit discipline is the key to improving your credit score.
Right. And I'm going to come back to the credit discipline part, but are you a public service or not a public service?
So we are a privately held or company owned by TransUnion, majority shareholding. The regulations applicable for us is the Credit Information Companies Act 2005. We are regulated by RBI and we have been in India. This is our 25th year of existence. And I think so the common man on the street relates to our brand as CIBIL score. So TransUnion CIBIL is our organization name, but the most common known brand for our organization is actually CIBIL score.
Right. And my point is, you said the first time I can access my score, it's free, and after that I pay you. So how does your business model then work, and who all are your customers, so to speak, apart from those who are accessing scores?
So yes, the customers are twofold. One is the banks and NBFCs. Second is the end consumers. So banks and NBFCs for their underwriting pull the credit reports of the individuals, and the individuals come on CIBIL.com, take their free annual credit report and score. And if they want to take it on a much higher frequency than the annual basis, they have to pay a subscription fees for that. But the banks, NBFCs give us data on a monthly basis and we match merge it, give a consolidated credit report, scores, multiple analytical solutions to banks so that they can understand the consumer profile better, they can underwrite the consumer better, and at the same time, the consumer, basis their credit history and credit score, can get the best terms and conditions in the country today.
Right. And as you do that, what's the mix of revenue today between what you earn from banks and the institutional customers versus retail customers who pay subscription?
So we largely focus on our business revenue side. It's more towards working with banks and NBFCs because we want to make sure that for the consumer, we keep it very, very simple, that we offer a free annual credit report. And at the same time, if the consumer wants at a higher frequency, then there is a small subscription fee. But we largely like to engage with the consumer through a free annual credit report. And what we work commercially largely is with the banks and NBFCs.
So would you say it's 80-20, the revenue split?
Yes, or probably higher, because our objective is to make sure that the consumer gets the credit report for free. And we work commercially with the banks and NBFCs.
Right. Okay. So I'm going to come back to the consumer in a moment. But tell us about the volume or the magnitude of data points that you're dealing with today, and what is going on behind the scenes, so to speak. And I'll also ask you the mandatory AI question in a bit.
Sure. So the banks and NBFCs under the SICRA Act are expected to submit data to Credit Information Company on a regular basis. Now the frequency has been changed and moved to
And you're not the only company. There are
4 other credit bureaus, all licensed by RBI, governed by RBI. So the banks and NBFCs submit data to credit information companies at a higher frequency now. It's fortnightly data.
Earlier it used to be less.
It used to be monthly, now it's fortnightly. And once all the banks and NBFCs give in an automated way their customers' credit obligation and their credit information, those are synthesized. Obviously, it's a huge quantum of data. We mix and match. And when an individual pulls their own credit report, they get the entire credit history and the score. Similarly, when a bank pulls a credit report of an individual, when he or she applies for a loan, they get a consolidated view. Now, the quantum of data is quite huge. So, if you look at in terms of the ever credited and reported to CIBIL, would be around, say, 60 crore individuals data reported. And the interesting part is that out of these 60 crore individuals, 27 crore are credit active population in India. That's when we look at 10 years, 20 years, 25 years since our existence in the country, and as a company, we look at it gives a lot of sense of pride because the credit penetration has gone up significantly in India. Today, when you go on the street and ask saying that, okay, can you go and get access to credit? The answer would be absolute yes.
Right. And you're saying 600 million are people who've accessed the CIBIL system, but 270 have loans of some sort right now. Is that
so? 600 million would be individuals who would have ever taken loan from the banking ecosystem,
because of which you have their data.
Because of which they have been reported to CIBIL. From the 60 crore individuals, 27 crores are credit active. Means they have either repaying it or they have applied in last 12 months, which is a good, healthy population.
So 270 million is, I'm assuming, the base kind of the base level for the data flow that starts. Each of those people, individuals, and their multiple loans, perhaps, if they're multiple. Now, how many banks send you this data, or NBFC send you this
So
data?
we work with actually 7,000 plus financial institutions in the country, which ranges from public sector banks, private sector banks, NBFCs, regional rural bank, cooperative banks. And the bulk in terms of the quantum of credit institutions actually cooperative banks, because they operate in semi-urban rural locations and they enable neighborhood lending.
So you're saying of 7,000, how many would be the regional rural cooperative
So
banks?
regional rural banks are 40 plus, but the bulk is cooperative banks.
And how much
So
would that be?
that would run into thousands.
Okay.
Because right from a single branch cooperative bank to a development cooperative bank to an urban cooperative bank to all categories of cooperative banks across the length and breadth of the country.
Right. And so therefore, scheduled commercial banks, I mean,
Yes.
the big banks, State Bank, ICICI, including private, public, all of that would be less than 100, I'm assuming.
Yes. So the larger institution, the number of institutions are less, but the quantum of consumers' data they report is significantly higher. When you look at cooperative banks, the number of credit institutions are huge, but at a bank level, the number of customers they report to CIBIL is lesser. But then they work in deep geographies. As I mentioned, they work on neighborhood lending, and it's important to make sure that that data gets reported to CIBIL, because that's where the true financial inclusion happens.
Right.
Because the larger institutions traditionally post-COVID would focus on a credit-tested borrower. It's still the cooperative banks who bring in the priority sector customer along with the public sector banks on the semi-urban and rural locations. And a lot of interesting changes have happened post-COVID in the credit market.
Right. And, some of these borrowers who are far away, the bank that is lending to them, let's say it's a cooperative bank, and this applies to anyone, they look at the CIBIL score as an indicator, but they're not bound to they're not bound to act on the basis of that exact score, is it? Or,
Yes. So what happens is that credit score is one of the parameters into the credit assessment. They will look at employment, they look at income information, they look at credit history, they look at credit score. So there are multiple parameters they would look into a borrower when he or she applies to make sure that you underwrite the borrower in a holistic way. And make sure then you decide whether to give or not to give a loan, and to what extent to give a loan, and to what tenure you want to give a loan.
Right. Okay. So let me ask you a little bit about the data upload and the data dump. How does that happen I'm assuming it's happening all the time, but what's the interface? How do people connect to you?
So, two modes. One is when banks submit data to us. Right now, the RBI circular, which came in effect from January 2025, it's quite progressive, which ensures that credit institutions give data to credit bureaus on a fortnightly basis. Now, why it's important to get data on a higher frequency? Because the bank gets a fresher data to understand the credit repayment behavior of the consumer better. Same time for the consumer makes a payment, it should ideally reflect in the shortest possible time, so that when he or she goes and applies, their latest credit information is available for the bank to give the best terms of conditions. So now this is fortnightly. The way forward, it's actually moving from fortnightly to weekly to daily to real time. That's the future which we see as the CIC in the country, and that's the way forward, because what happens the moment you move towards daily data reporting, both for the bank and the consumer it is beneficial. Because when a bank looks at the consumer's profile, they get all the information real time. That helps them to take the right credit decision. From the consumer's point of view, if he or she has made a credit card payment, a home loan payment, it should ideally reflect on a real-time basis. Now, the day when we move towards daily or real-time data submission, it's going to be a game changer, beneficial both to the lender and the consumer. And when you look at data access by banks, we are already way ahead as compared to all the developed countries in the world. Today, a bank or the consumer can pull their credit report at a time taken less than a human takes to blink an eye. So it's actually 1 odd second, which is one of the best globally.
Right.
So what happens is that today, you may not, we talk about quick commerce delivering in 10 minutes. You log on to any of the bank apps, and if you're an existing customer, you click and you get a loan in 10 seconds.
Yeah, that I
But
would think that's a
definitely-
problem. I would think that's a problem too. I mean, it sort of encourages people to take loans maybe when they shouldn't be taking.
So that's where the credit discipline comes in,
Yeah.
saying that take credit when you need it.
Yeah. Anyway, and no. So to come back to how banks talk to your system. So banks work on core banking solutions.
Yes.
And so do core banking solutions connect to your system? And can you tell me a little bit about that?
So from their core systems, the data gets extracted through the various scripts run by the bank end. It comes into a standard format. So the regulator has defined the formats of submitting data from the credit institutions to all the 4 credit information companies. It comes in a standard format. It comes in an automated way, comes and gets posted into the predefined secure SFTP folders. It gets picked up from there. It gets uploaded, ingested. One would look at what's the name, date of birth, gender, one of the national identifiers, look at the existing subject in the database, whereas the reported, do the mix and match, run the algorithms, and combine it into a single credit information report as and when it gets accessed by
All of this
another
happening
bank.
in milliseconds, I'm assuming. Yeah?
Everything happening in milliseconds or seconds, but at the same time, everything happening in an automated way.
Right. And is this the software that drives all of this on your end? Is this a product that is globally used, or is it something that you've developed?
So it's a combination. We like to take the best practices from the global world, bring it to India, but at the same time, something which we can build homegrown, like the latest technology stack. On the CIBIL side, we have made it in-house locally. And what's interesting is that on the MSME side or the small businesses side, when we look at the credit infrastructure or the credit information company's ability to provide that information to banks is globally one of the best. Because India globally is the hub for small businesses, and small businesses need credit the most in the country.
No. So just to go back to that software. So you're saying that the software that you use is a combination of product and something that you've developed internally. And the reason I'm asking this is, so one of the classic complaints against CIBIL and maybe all personal information bureaus is that my information has not been updated. I've been paying on time and I paid, and yet my bank is saying that it's not updated or it's not reflecting. So why does that happen?
So what happens is that banks get 30 days to report the data to bureau. And that's why the regulator brought in the progressive circular saying that move from monthly to fortnightly. Now, if the consumer is paying on an X date, and if the consumer have to wait for 30 days for their bank to submit data, that can become a challenge for the consumer to get it. Yes, there are online tools right now available for banks to submit one consumer's information as and when they make the consumer payment. So we call it as like online maintenance, where the bank bases the latest credit information, can submit it at a consumer level. But the ideal case is to move towards daily or real-time data submission.
Right.
Your
So you're
question,
saying that's the
because-
only glitch right now, that the time that is there is causing the gap
Yes.
in-
So fortnightly, if you ask me, fortnightly is better than the monthly earlier, but the ideal would be daily data submission. Because you look at it, the consumer makes a payment into a bank branch, comes out, and in few hours, the payment is updated.
Okay, so let's say I had a big loan which I've closed last week.
Yes.
And so will it be exactly 15 days later that my status will get reflected, or is it a 15-day cycle that you follow?
No. So a bank can send it on the same day when the payment is done, and we will upload it. But banks generally send it with a frequency of 15 days. But we have built in the technology where a bank can send it as many times they want to send it, and we'll upload it.
Right. And again, I'm assuming the software that is looking at, or the algos that are looking at this and saying, okay, here is so-and-so, they repaid their big home loan on whatever, 20th of April, and there's only now 2 loans remaining, which are basically credit card, which can get, closed off any time or closed constantly. or consistently. And the algorithm which sort of addresses that and gives a fresh score is also automatic, operating real time.
Yes.
Okay.
It's in real time because we want to make sure that the consumer gets everything basis what's reported, whether in terms of the loan obligation, whether in terms of the repayment, whether in terms of the outstanding balances, because the score gets computed real time basis all these parameters. So if you foreclose a loan, if you make a advance payment, or if you have made a delayed payment, everything would get reflected real time.
Right.
This
Okay.
is the submission.
And in terms of computing power that you're using at any point of time, which I'm sure is in the data centers, how would you rate your requirements versus, let's say, a bank or any other financial institution, or any benchmark that you use here?
So I would say with pride and humility that today, more than 2 decades, when a loan gets applied for, the banks pull the CIBIL report and score, and we deliver that on a near real time. As I said, 1.2 odd seconds. That's I would say globally one of the best. And at the same time keeping the data in a secured manner, keeping a data of a scale of this quantum, and it's not data just on the consumer, but it's a data on the MSMEs, it's data on the microfinance borrowers as well. So all varied categories of data, and managing this data with no unique identifier in the country. So the unique identifier does not get reported to us. It's the choice of the consumer and the lender that what identifier information they report to any of the 4 CICs. They can give the mobile number, Aadhaar is not allowed, but mobile number, PAN number, any of the other national identifiers, and basis this submission, we match and merge 2 subjects and deliver it.
Right. And you mentioned you mentioned non-bank finance companies, or sorry, you mentioned MSMEs, and you also mentioned microfinance. So when we say 270 million active, we're talking about individuals plus MSMEs plus, or is it?
So MSMEs are additionally. So we have 3.6 crore MSMEs reported to CIBIL ever. And out of those 3.6 crore MSMEs reported, 92 lakh are credit active. Now that's where we see a huge opportunity for the MSME sector, because out of the 7 odd crore MSMEs, obviously there are different numbers quoted in NSS and other public domain information from 6.5 to 7 odd crore MSMEs. Out of those 7 odd crore MSMEs, 3.6 crore are ever created and reported to CIBIL. And from those 3.6 crore, 92 lakhs are credit active. So when you look at it in terms of MSME, only 12 to 15% of the MSME in the country are credit active. And actually MSMEs need the maximum credit.
So
They
why-
contribute to 30% of the GDP,
Yeah.
but only 12 to 15% are credit active.
So why is that?
So
So why is the credit activeness so low?
So it's actually multiple things. The credit penetration is low, and then the credit activity is low, because you look at from the lens of the MSME, that the MSME borrower feels more comfortable to get an individual loan vis-a-vis on the MSME, because there are higher turnaround times, there are additional documentation required when you take in an MSME vis-a-vis when you take an individual capacity. In fact, we recently did a report called Builders to Borrowers along with Niti Aayog, and there one of the data points which you highlighted is that women borrowers or consumers in India prefer gold loan and personal loan, and then the third preferred product is business loan. So you look at it in terms of the preference of the women consumers in India, they actually gold loan, personal loan, and then business loan, because when you think from the lens of the women consumer, it's actually the convenience, because you can get gold loan in a much lesser timeline and at a significantly lower documentation and paperwork, which obviously becomes very critical for a borrower when they are seeking loan.
Right, and therefore we are also seeing Reserve Bank tightening gold loans in separately. So, however, when an individual borrows who's also attached to a small enterprise and a company in this case, your your CIBIL score hits both. As in, if I was an individual went to a bank, or if my company went to the bank, it would still reflect on my score, right? I mean, it's not like I mean, this is not like a Tata Motors where the CEO's CIBIL score will affect Tata Motors rating, but in a small enterprise in India, both are interconnected, isn't it?
Yeah. So when you have the MSME and on the MSME, when you have the individual associated with that MSME, it gets reported under the relationship segment. But in terms of your credit obligations are slightly different because they are two separate legal entities. Individual, here the MSME is the proprietorship form, partnership form, LLP or
No, but that's not the way, I think, but the way the bank sees it, if your individual score is low, even if your company score is high, your the chances of getting that loan are equally impacted, isn't it?
Yes. So when a bank look at giving a loan, they look at the, in case of small businesses, they would look at the credit performance of the entity, the individual, stock, collateral. They would look at various aspects before they decide whether to give or not to give, and at the same time use all those data points to even decide the credit limits and the tenure of the loans. So they look at every aspect of the individual entity associated before they take the credit decision.
Right. And what's been changing in this approach or in the way data has been analyzed, and to your benefit as well as to your, let's say, your customer's benefit, and I mean the retail customer. So in the last few years, I mean the way you're using data, the way you're extracting it, and so on.
So I would say twofold. One is that I'll first talk about the lens of the consumer. The consumer has become far more credit aware, which is a very good thing because we have looked at is that a consumer who's credit aware, their credit performance is relatively better as compared to a consumer who does not monitor their credit history. So we have close to 150 million consumers who monitor their credit history with CIBIL. Now it's a very good number, which means is that this segment who is credit aware, it's very similar to health. And if you know your health parameters, means you are conscious of how do you make sure that you have a good health. So why is this consumer doing it? Because a consumer knows that if I have a good credit history and if I have a good credit score, I will get the best terms and conditions within the banking ecosystem in India because the rate of interest are linked to how the borrower performs.
But
And the credit history.
could it also mean that, you know, these are customers who've indulged in frenzy of borrowing in the post-COVID years and are now sort of trying to maybe either self-correct or trying to find out where they stand?
So actually, the good thing is that a bank or an NBFC looks at credit repayment history, credit score, income, debt burden ratio. They look at multiple aspects before they decide. Credit history, credit score is one variable into the credit underwriting and not the only variable.
Right.
So it becomes a good parameter for the borrower to get motivation saying that yes, I need to continue to pay on time. At the same time, the bank gets a idea about the individual saying that what has been the performance for the last few years. So it becomes a win-win.
So in these 150 million, would you say the majority have good scores or the majority do not have good scores?
So actually, the score gets computed real time. So if a borrower might have an X score 1 year back, but now has paid or not paid, the score might change. But I would say is that the consumer have become far more aware. And at the same time, we are working a lot with the consumers and the banking fraternity to make sure that we educate the consumer about the importance of having a good repayment history and a good credit score. Because it's important, the reflection of your credit repayment history needs to be known as a consumer and so that you can go and avail the best financial terms and conditions from the banks.
Right. So let's come to the present for a moment. So we've talked about the architecture, and you recently released a report where you've talked about how originations are going down because I'm guessing there was so much frenzy in borrowing, aided by, let's say, easy apps and so on and so forth. So what are the current trends that you're seeing in terms of retail lending borrowing?
So the credit demand and supply both have moderated. And while what gets spoken publicly is the credit demand and supply moderation on the unsecured side, which is your credit cards, personal loans, but actually the moderation have even happened on the secured side, whether it is home loan, whether it is car loans. And our hypothesis is that because when you look at some of the public domain data, is that the home sales or the car sales have not grown by the same pace as expected. And hence, obviously, if people are not buying more homes, more cars, obviously the underlying credit demand for those purchases goes down as well. So yes, credit demand and supply both have moderated. But while what gets spoken about is personal loan, but the biggest impact have happened on credit cards, where the credit card supply or issuances have gone down. The delinquencies have slightly inched up. So it's one retail product which have got impacted. Otherwise, when we look at all retail loan products, including personal loans, that in fact personal loan delinquencies are quite stable. When we look at year on year, after multiple changes in the marketplace, the personal loan delinquencies have stabilized, and secured loan delinquencies like home loan, auto loan have actually come down. It's only credit card which have slightly inched up, but on totality, retail loan portfolio qualities have improved year on year.
And what's the demographic insight in this?
So interesting. Very good question, Govind. I would say is that while we talk about trade performance, a massive shift has happened in the country post-COVID. So consumption loans, which is your credit card, consumer durable and personal loans, the average age has come down, which is very close to 30 years. So 31 years to be precise, closer to the median age of India. And mortgages, the average age has gone up. It's actually 41 years.
So which means people are postponing their own.
Yes, and why it is happening is interesting data points. The consumption loan is largely taken by Gen Zs, and the new to credit or the credit inclusion in the country is happening from two retail products. One is your priority sector agri lending, and second is your consumer durable, which is your phone loan. In the past, it used to be two-wheeler loans along with agri. Two-wheeler loans continue to bring in new to credit customers, but the big quantum comes in through consumer durable, which is a phone loan. And why, if you look at it,
more than 65-70% of phones are now bought on loans. So,
yes, because phone today has become a big productivity
and it
tool.
costs as much as a two-wheeler, if not.
Exactly.
Yeah.
It's a big productivity
Though I did
tool.
put that together till you mentioned it. Yeah.
It's a good productivity tool. Individual comes out of post-graduation or graduation, gets into the job market. The first thing they would need is actually a phone, and you can get that phone on loan, and that brings you into the credit fold. You have a good repayment history, and that's how you build your credit. In case of mortgages, obviously post-COVID, the underlying asset or the property prices have gone up, and hence the consumer probably for the down payment is delaying the decisions. So you look at it how it's panning out, that you have the Gen Zs who prefer a shorter term loan because they don't want to commit for 10 or 20 years. It's the millennials or the people upwards of 40 years who prefer the long term loan or the mortgage loans. And the interesting thing is that it's not the Gen Zs who are the fastest growing segment, but the credit growth is happening higher in the semi-urban and rural location.
And why is that?
Because that used to be the credit under-penetrated market, and that's where the opportunity existed to bring in those consumers into the formal credit market.
Okay. But when you say semi-urban rural, you're still talking about mortgages or mortgages plus consumer loans?
Consumer loans as well.
Okay.
So consumer loans, in fact, the highest growth has happened in the semi-urban rural locations and people less than 35 years age.
And that's I'm assuming a lot of that is driven by NBFCs.
So banks and NBFCs both. So whether it's the consumer durable loan, whether it's a two-wheeler loan, whether it's the agri loan. So these three actually bring in the bulk of new to credit borrowers.
And now that you mentioned that, are you seeing differences in data that flows from when it comes to credit overview of the first to credit customers or even the older ones between the way NBFCs and banks are operating?
So their target segments are very different. Banks have the branch network focus. NBFCs will have a branch network and an feet on street model. So there are different models evolving, and everybody is competing for the best customer. It's actually the customer who has the choice to go to a bank or an NBFC or to a cooperative bank. So today the good thing is that customer has multiple choices whether he or she is in the rural location or urban location, because when you look at the number of branches being put up in semi-urban and rural location, it's a good number.
And between, let's say, within banks, between, let's say, state-owned banks versus private banks, because we've clearly seen a lot of lending aggression by private banks. So is that showing up in your system? I'm sure it is, yeah.
So as I said, the retail portfolio is actually looking pretty good on the secured side. Unsecured side, personal loans is stable. It's only the credit card. And similarly, Govind, on the MSME side,
So
the
how do you
portfolio
distinguish-
quality.
Yeah, I'll come to MSME. How do you distinguish between personal loan and credit card for the purpose of computation, let's say?
So obviously, when an individual goes and seeks a loan, it's the category is known that you are applying for a credit card, personal loan, home loan, car loan. So you disclose the product you need. The bank reports that data, that this individual has taken home loan, car loan, tenure, in terms of other details, the sanction amount, the disbursed amount, the monthly payment, everything.
Got it. So if I come back to credit cards, so you're saying there is a problem in credit cards.
Yeah.
And what does that tell us about behavior? I mean, I know this is nothing new and various countries in various stages of development have gone through it. But are we in that phase right now where more and more people are taking credit cards or have taken credit cards and are sort of in that early phase of splurging and then maybe discovering that, this is where they need to moderate?
So, Govind, actually, it's not more of the portfolio deterioration, but it's more to do with the denominator effect, that the number of new cards issued have actually reduced.
Okay.
And the way NPAs are calculated is your number of accounts delinquent than the total number of cards in force. So, when you look at those, obviously the number of cards issued recently has come down. Obviously, that's been one parameter. Having said that, the credit card delinquencies have only inched up 30 basis point, which is not as significant. The credit card outstanding are not that big in India still. And also there is a little bit of awareness in the consumer that if I use a credit card, I might pay a X rate of interest. If I take a personal loan, I might pay a very different rate of interest. So it's actually the consumer who is deciding that if I need credit card, do I use credit card or do I go and take a personal loan? So actually the consumer is deciding which is the preferred credit product.
And you're saying somewhere in this 150 million active or hyperactive aware customers, people know, even if they can't do anything about it, they know what's going on in their credit lives.
Yes, yes, which is a very good, healthy indicator, because we have seen is that the borrowers who monitor their credit history do positive actions.
Okay. So I'm going to come to what I call the mandatory AI question. But let's look at the data points that you're looking at. So you have 600 million accounts, 200 million of which are active. Within that 150 are, you're saying, constantly accessing their this thing. And you've got 30 million small and medium enterprises. So what is the total number of data points that all of this is generating on a given day or a given month?
So the bank has the choice with a frequency of 15 days to report the data.
Right.
So you look at it saying that it's the number of records actually run into billions. Because
that's my question. Because if suppose, let's say I've in the last 3 years, if that's your active tracking period, I have taken one fresh loan, but I'm constantly repaying an old loan. Plus, I may be spending on my credit card. So all these are data points for you.
Yes, yes. So whether it's a credit activity, whether it's 27 crores tomorrow, whether it's 30 crore plus, or even if it's a historical loan, if there is an updation, the bank would submit that data. Okay, so you look at the universe, say 60 crore would be the outer universe for the retail side to get reported at this stage as we talk. 3.6 crore of the MSME's data to be reported. And the good thing is that as we bring in new to credit customer, this quantum will increase. And as we increase or I would say reduce the frequency, the quantum will multiply. Because you look at it, if we were uploading say X million of records, now with the frequency moving from monthly to fortnightly, you are doubling the quantum of records.
Yeah.
Now we are recommending saying that the ideal state is that moving from fortnightly to weekly, then to daily. So look at it, the entire credit population data getting reported. So it's a huge quantum of data to be worked upon.
And-
But that's required because it's beneficial both to the credit institution and to the consumer.
And where are we in terms of the computing capacity to do this on your end and on the bank's end?
So I think so technology and India go hand in hand.
So that's not an issue. Yes.
That's not an issue because the best technology brains in the world sit out of this country.
No, I'm talking about compute
So
capacity.
that's the brain who brings in the not just the compute power. See, it's not just the raw compute power which matters, but how do you define your data architecture in an optimum way that you don't waste your compute power.
Sure.
So your compute power and the way you process your data, the two go hand in hand, and that's the most efficient way to run it because the raw compute power itself will not give you the best response times.
So what you're saying is that even if, let's say, your data dump doubles or triples in size because it goes from fortnightly to weekly to daily, then your system is ready for it.
Yes.
Now it's only really up to the bank and the 7,000 institutional customers.
And the good thing, Govind, is that even the banks are interested to move towards weekly and daily data submission because everybody in the process benefits. The bank gets to let the world
What
know.
stops them today?
It's just a matter of time, I would say.
Okay.
It's
So
not
it could happen that, let's say, half your 7,000 banking or financial customers start uploading every day. The others take longer. Or do all have to operate on a 15-day
So if the regulatory requirements change, like the regulatory requirements now mandates fortnightly. If there comes a regulatory mandate to move towards daily data submission, then all the 7,000 institutions.
But fortnightly, I'm assuming, is the minimum.
Yes, you can do it at a higher frequency.
Are people doing that?
Yes, some of them do.
Okay. So how often are they doing that?
Some of them are actually giving their new accounts open on a daily basis.
Okay. So this is already happening then?
Yes.
And
So in a smaller quantum, but I think so it's required that we move towards daily data submission.
Okay, that's interesting. So to the AI question now. So you've described the data points that you're dealing with on a daily basis or a fortnightly basis. So what are the kind of AI applications that you're seeing today to improve the quality of your own insights and insights for your customers?
So it's multifold. When banks access data, they access on their existing customers. When a customer applies, we use various machine learning models, AI models to assess the borrower. Obviously, the CIBIL score being the flagship score which the end consumer understands. And there we try to use the latest modeling techniques, but at the same time keep it very simplified because the end consumer needs to know that it's the repayment history, it's the loan obligations, it's the number of applications you make. So you put in all those parameters. So one has to make sure that you have the balance where the end consumers understand. At the same time, you help the lenders to assess in a very sharp manner because what's the objective of all these credit models is to help the banks understand the risk better or help them manage the risk better of the customers coming through the door as well as the existing portfolio.
But there is an algorithm, there is a base algorithm. It's almost like the Coke formula, which is yours, where you eventually add up to that 800. Now, my question really is, what is changing in that? Suppose, let's say, thanks to AI, you're able to attribute some higher score for behavior, which you couldn't do earlier or weren't doing earlier. Or are you saying that the formula, like the Coke formula, is the same all this time, all these years that you've been around?
So actually, I would say it's the modeling technique. And the modeling technique is a function of the modeling variables and parameters. And it's a function of the underlying data. Whenever there is a macroeconomic change, you need to rebuild your scores. So we have already had 3 versions of scores in last 20 odd years in India. And it's important that every 4 to 5 years, the credit information companies need to come up with a new version of the score because the underlying macroeconomic or the customer base has shifted. Because if there's a population shift, you need to make sure that you incorporate the population shift. At the same time, it's a very simple thing, is that you want to look at a credit repayment history, that will continue to be one of the biggest parameter every credit model built in the country or globally. Because the underlying thing is that you want to assess the credit worthiness of the consumer.
Right. Right. But what's changed? So let's say when you say this model has changed in 3 times in the last 20 years, between the last time and today, what are the changes even within the whole architecture?
So I would say the number of data points available, if 20 years back, the data points available were X, now they have grown multiply. One. Second is the frequency of the data available. Third is the depth of the information available. That you have today not just the large banks submitting data, but even the cooperative banks submitting data. So what you have, the width, the depth, and the availability of data and the frequency of data, that has really changed manifold the quantum of data available to build a model and to run a score on a real-time basis. Everything has changed in last 2 decades.
But when you say macro shift, what is the macro shift that you're referring to?
So, if consumers' credit in 20 years back is to be concentrated around, say, metro and semi-urban, now the geography spread is very different than 2 decades back. One. Second is that 20 years back, an individual took largely, say, only a home loan and to some extent a car loan, and urban customers going for credit card only. Now, the biggest credit growth is happening in the semi-urban rural locations where the type of loans being taken are gold loan, home loan, two-wheeler loan, consumer durable loans. So, the different types of loans being taken have changed completely in last 2 decades.
But how does that influence what my score could be or my anticipation of what my score could be?
So, score is simple of what data comes in. It's like very similar to food, that you can make a dish based upon the ingredients available. If you have multiple ingredients, you can make multiple dishes and you can have a multi-course cuisine. Same way, if you want to build a score or a model, if you get multiple data points, if you get sort of across geographies, across age brackets, if you get across product types, it's very similar to food dish being made.
Right, and dal tastes different in every household, as they say in India. So, to that extent, I mean, can I shop around for other credit ratings, individual credit ratings? Because, as you said, there are 3 others.
So, the law says that every individual can go on to any of the CICs and get one free annual credit report free. So, if an individual has taken, say, home loan, car loan, and say a credit card, all 3 would reflect largely in all the 4 credit reports. So, the credit reports will reflect the credit obligation across the 4 CICs. An individual can decide to choose which credit bureau they want to go for.
Right. So, let me come back to the latest figures that you have. So, credit demand in your data says that it's slowed down, and you're also projecting that it is slowing down. So, what are you now seeing ahead? I mean, we are now in, let's say, the beginning of the new financial year, that's 25-26. How are things looking as you...
So, for the January, February, March quarter, obviously the credit demand is not the traditional JFM credit demand. And it's not just the unsecured credit demand and supply which is moderated, even the secured credit demand is moderated. Obviously, one knows that historically, whenever there are rate cuts, you will have the credit offtake going up because obviously it eases the available liquidity in the market. There is a rate cut passed on to the consumer finds it sort of interesting to go and apply for a loan. So, the expected next 12 to 24 months is based upon the macro conditions, the pass on of the rate of interest to the consumer. We do expect saying that from here on it to take forward and move upwards.
So, what should people do basis your findings? What can banks do? I mean, not that you are telling them what to do, but what could they do? And customers, in any case, you've talked about, which is a more active, keep tracking your score and keep repaying and so on, and make sure that you're debt free. I mean, you're debt free at least for 3 years. And, and not. I'm assuming before 3 years, whatever happened is history.
So, it will reflect in your credit history.
Yeah.
But the credit score is basis the last 3 years of repayment history.
Okay, that's good to know. So, I'm going to use a question which someone sent us. So, Indrani Dasgupta asked us, she read a piece that Reserve Bank is reconsidering the fact that even if one defaults non-loan EMI, CIBIL won't hit. So, I don't know, does that make sense?
Non-loan EMI?
Yeah, so maybe it's an EMI which is not connected to... maybe if it's not connected to a bank, maybe, or is there any? Yeah.
So, I'll explain it. So, if it's a credit institution, whether it's a bank, NBFCs, cooperative banks, RRBs, any of them, if you have taken a loan, okay, and you are paying it, whether it's a loan or a credit card, in an individual capacity or in a non-individual capacity, that would get reported to CIBIL or any of the 4 CICs
Right.
on a fortnightly basis.
Right.
So that's a mandate in terms of the reporting by the credit institutions to the 4 credit information companies.
Okay. And if you were to look ahead now, I mean, from a more macro point of view, and looking at how internationally things work. So, for example, you said that our turnaround is amongst the fastest in the world. I'd also like to know, why is it that it's faster, or why are others not as fast? Is it because the technology systems are newer here, or the load that you're dealing with is different? But also, what is the future for personal information sharing looking like?
So I would say as CIBIL, we have always been committed to bring in the best technology. And yes, why it's important? Because there's a very strong linkage. Credit growth and GDP growth are linked. And we want to make sure that for the credit growth to happen, it's not just that response time of 1 second, but how do you make sure that you are able to get, upload, ingest, and deliver the quantum of the data which India has. For India to grow, credit growth is important, and we want to make sure that the best technology and the most secure technology is available for the end consumers and banking. And yes, going forward, we see the quantum of data multiplying significantly. As I said, the way forward is to move from fortnightly data submission to daily data submission. So the quantum of data is only going to increase, and it's our sort of commitment to make sure that we continue to invest and bring in the best technology. And yes, because as you can see is that the payment ecosystem in the country and the credit ecosystem in the country, and we should be all really proud as Indians, is India stands out one of the best globally. You can make a payment at the click of the button, and at the same time, a consumer, if they need credit or if an MSME need a credit, they can get it very easily. They don't have to wait for weeks and months. It's simply basis available of data of the consumer that the credit institutions decide to give a loan.
Right. And last question. So, in terms of policy, and you've talked about one critical input, which is the frequency of data, which should be speeded up and so on. What is there a wish list that where you feel organizations like you can be more empowered, which in turn will hopefully help consumers be more empowered? Is there anything that you're looking out for?
Yes. So I would say, Govind, it's actually the non-credit data. Because when you look at India's ecosystem, you have a lot of consumers sitting in the semi-urban and deep geographies, rural locations specifically. They may not have a credit footprint. How do we bring in those individuals and small shopkeepers, businessmen into, or the agri related farmers into the formal credit sector? Because for the bank or NBFCs to take a credit decision, they need information about those individuals. Now, if somebody is borrowing for the first time, you don't have credit footprint. And for us to build any reports or scores, we need non-credit data or alternative data. So information like mobile bills, electricity bills, insurance, subsidy, all those data points can come really handy to actually score a new to credit borrower and actually bring in the borrower or consumer in the remotest of location into the formal credit sector. Because the moment you give a credit information, whether it's not just the loan, but how a borrower pays or a consumer pays on mobile, on electricity, the frequency of insurance payment, so and so forth, banking information. And one interesting data point, when you look at it, saying that today a small shopkeeper may not have access to credit or may not have taken a loan. But thanks to UPI, that shopkeeper will definitely have a bank account and a UPI handle. Now, that bank statement information is good enough to provide a new to credit score, which will enable that small shopkeeper to get access, or the panwala to get loan from a bank.
Right. But that's already there.
UPI is there, but those data is not available to credit information companies to actually build credit scores and give it to banks and NBFCs to underwrite the consumers.
But the banks have to share that with you.
Yes, the banks have to share.
Okay, and that's only triggered when someone applies for a loan, but not proactively.
Yes, so the current framework allows us to get only the credit data. As you asked, what is the wish list? The wish list is to get non-credit data or alternate data,
Right.
so that we can score the new to credit borrowers.
Right, and as a hypothetical example, if let's say Vodafone or Jio wants to share data with you for whatever reason, there's nothing stopping them.
The current regulations don't allow them. The regulations which govern us, the regulations which probably govern the respective entities, will have to modify or go for changes in the regulatory.
But if I, as a consumer, say I give you, that's Vodafone or Jio, permission to share my mobile phone payment bills for the last 3 years to CIBIL, would that be possible?
So it's right now.
So that you can take a decision.
So right now it's only credit data which gets reported to any of the 4 CICs. We'll have to go through amendments in the regulatory aspect to make sure that the non-credit data can flow to CICs as well.
This is happening in other parts of the world?
Yes, in some parts it does happen that the CICs might get access to a non-credit data as well.
But on demand, I mean, because the consumer accepts, or is it because they're sharing all the time?
So it's a function of the consumer and the lender both. If the lender has that data or any of the ecosystem players have that data, they can submit it. Obviously, the consumer should be fully aware and with the consent of the consumer that they give this non-credit data to the bank, and then the bank submits it or any of the utility companies submit it to the CICs.
Right. And if I've been paying my electricity bills on time and my mobile phone bills on time and within the date, does that make me a better customer for the purpose of your starting point?
So yes, whether it's a loan or it's a utility payment, the future prediction generally happens on the past behavior.
Got it.
If one has paid for 1 year, 2 year, 3 year, 5 year, then you know in all likelihood this consumer has a high chance to pay in future as well.
Right. Bhavesh, it's been a pleasure speaking with you. Thank you so much for joining me here.
Thanks for having me.
Thank you.